Have you ever wondered how to invest your onshore earnings as a systematic investment plan, also known as SIP, in the Indian stock market? Wonder no more? Today, we demystify the process and break it down into simple, easy-to-understand steps. Please watch this video till the end. My sample portfolio profit and loss screenshot is attached. Picking the right stocks to invest in is like finding the perfect recipe. It's all about mixing the right ingredients. So what are these ingredients? Let's dive in. Let's take example company name Stock Portfolio Limited. Assume Stock Portfolio Limited's net income $100. Outstanding shares 10 earnings per share. EPS is $10. Stock price is $30. Then its PE ratio is 3, which is calculated by simply dividing the stock price of $30 by earnings per share of $10. A PE ratio of 3 means that investors are willing to pay $3 for every $1 of earnings per share. In simpler terms, if you own one share of this company's stock, you're paying $30, and the company has earned $10 per share in 1 year. Just keep my final wording in mind in real time. If the stock PE is 67, then you should invest $67 to earn $1. Okay then, is it something you should not consider if it is greater than 30? Definitely no. If there is growth in the sector or stock, PE will trade higher, so you can go for it. In the event that PE gets corrected, you should already be in profit. If the PE ratio is less than the industry average, it's a good sign. Moving on to the second parameter, ROA or return on asset. This metric measures how efficiently a company generates profits from its capital. A higher ROC value generally indicates that a company is using its capital more efficiently to generate profits, making it an attractive investment. Anything above 15% is considered good. The third parameter to consider is the debt-to-equity ratio. Aim to pick a debt-free company, or at the very least, a company that is in the process of raising funds to close its debt. The fourth and last parameter is the book value, which is the amount you'd get if the company were to close down and you were a shareholder. If the stock is priced less than its intrinsic value, it offers a margin of safety and is a good pick. Once you've checked off these 4 parameters, it's time for technical chart analysis. Look for the stock's support and resistance levels. If the stock is at support, start buying in small quantities, say 10 shares per day or week. This way you can benefit from an immediate rise in profit. Continue to average, regardless of whether it goes up or down. To recap, when investing your onshore earnings as SIP in the Indian stock market, consider the PE ratio, ROC, debt-to-equity ratio, and book value of a stock. Also, use technical chart analysis for buying strategy. Adopting this approach should help you see the green in your portfolio from the very next day. Remember, investing is an art, so take time to do your own analysis. Happy investing!